Welcome to another episode in our CEO series here on L.E.A.R.N Invest. Today we have the pleasure of speaking with Khary Robinson from the Mailpack Group, but also from Norbrook Equity Partners. So we'll be learning a bit about both companies today. It's going to be an interesting discussion. This is one we've been looking forward to for some time now. So I know persons would have submitted their questions in advance. We do have some companies we've been looking at from within the portfolio of companies that Norbrook manages that we're wondering, what's the future of those companies. So that's some of the things we're going to get into. We'll also ask Khary a little bit about his own investment preferences and experience, just to learn a little bit more about him. And so it's going to be a great discussion. As usual, be sure to like this video, share it with a friend. And if you're interested in learning more about the type of content that we provide, just check out the link in our bio and you'll be able to learn more about us.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn Grow Invest.
All right, welcome again. Let me know which platform you're joining from, because today we're actually streaming on all platforms. So you're able to, take part in this discussion, even if you're not directly on YouTube. So as usual, we're going to open with a brief word of prayer. Thank you, Lord, for this day and for the ability to produce wealth. We pray, Lord, that you'll give us the insights we need to make wise investment decisions. Bless us as a community in Jesus' name. Amen. All right, so it's good to see everyone here. I know, you're excited as I am to get this conversation on the way. So please join me in welcoming Khary Robinson. Khary, how are you doing?
I'm good, Jermaine. How are you?
I'm good. I always have to say thank you at the start for accepting the invite and for making the time, because I do know that you have quite a bit on your plate, for lack of a better term. So it really means a lot to us that you're able to make the time to be here.
No worries. I actually enjoy these conversations. Give me a break from the day-to-day of work, and I appreciate you inviting me. So thank you.
Yes. And I have checked out a few of your other interviews. You do seem very, willing to share, anything that you're asked, and, really, really appreciate it. So
maybe I need to learn from that and hold back some.
No. So it's actually a good thing, because I'll tell you that one of the things that we look at, and I say we as a community, we look at is how transparent CEOs are. So the more transparent you are, then the more there's trust. The more there's trust, then of course that makes it an easier investment decision should persons be, considering one of the companies that you represent. So it's definitely a good thing.
Awesome. All right. Well, I'll keep on it.
Great. So give us a little bit of a background about yourself. Who is Khary Robinson?
So I would like to say I'm a footballer, because that would have been my dream. But I am Jamaican. Went to school and raised in Jamaica until I was about 15. I went to school in the US, high school in the US, and spent a long part of my career there. So I went to college and business school in the US, worked in investment banking for quite a number of years, between traditional corporate banking, investment banking, and then in private equity. But I come from a very entrepreneurial family. And so there was this, especially in 2007 when I was in private equity, there was this push for financial engineering, and it was less about the businesses and what the intrinsic and fundamental value of the business was, about operations and enhancing the business, and more just about, how can I take debt and equity and play with structures to create something that made sense to the markets. And so I left with the idea that I wanted to buy my own businesses and grow them. I had started a couple of businesses in Jamaica in between college and business school, and got the experience of being an entrepreneur in Jamaica, but a startup entrepreneur. And everybody will tell you that starting a business and taking it from 0 to 100 is a lot more work and a lot more difficult than taking it from 100 to 1,000,000. And so I was keen on coming back to Jamaica and taking businesses that had a good platform, that were well positioned for growth, that we believe that we could invest in and grow. And for the last 15 years, that's what we've been doing at Norbrook. So I started Norbrook in 2008. Our first acquisition was a small car rental company called Compact Car Rentals. And our second acquisition was Mailpack. The premise of our business and our business model is to see an industry that we think is positioned for growth and to find a platform business in that industry that we can then acquire, put the right infrastructure around, so the right people, processes, resources, and really grow that business through organic growth, but also through acquisitions. And so we've done that, 47 times. So we've done 47 acquisitions. We've done it all over the globe. We've had businesses in West Africa and Ghana. We built 2 businesses in the US. One became the largest partner to FedEx in Florida, and we sold that to a Brazilian logistics company. And then we built a commercial landscaping business through a number of acquisitions in Broward County and Miami-Dade. But the majority of our business investments have been in Jamaica, and then recently throughout the Caribbean. And now we're looking at a couple opportunities in Central America. So it's been a great journey. We have a great team of young CEOs who run, independently and autonomously run each of their businesses. At this point, I spend a lot of time on the strategic side and supporting those entrepreneurs or supporting those intrapreneurs as they grow their businesses. I continue to look for opportunities where we can invest in and acquire businesses that we can continue to grow. So that is what I do in a nutshell.
That's a very large nutshell. So in terms of, I want to fill in the blanks a little bit about you first before we get into a little bit more about the details about the companies. So in terms of what you're looking for, help us to understand your mindset a little bit in terms of what you're looking for. Maybe even deconstruct maybe your first acquisition for us. What were you thinking about? What are you looking for? And what do you consider to be a successful, transaction?
Yeah. So I would never use my first, right? Because I now have 15 years of mistakes to know
yes,
how.
But I said first for a reason, because I wanted to see maybe what you were thinking about then. And then I was going to ask you maybe your most recent one and, see how those might have differed.
Fair question. I think a lot of the fundamentals are the same, right? So I identified that there was a transition or a succession issue in Jamaica. At the time in 2008, there was no capital markets. There were no real M&A activity in the market. No way for people to refinance or take cash out of their business. And the reality is that a lot of family-run businesses, that first generation, maybe the second generation, would continue to drive growth and be active. But there was a point at which that activity slowed. And there was this huge opportunity to take these platform businesses that had a lot of potential and just bring some new ideas, new innovation, new technology, proper processes, proper governance to those businesses and help them to grow. And so our first one was in the car rental space, but not because we wanted that business. I left my job to come and buy Hertz Car Rental. And I spent 7 months working on that transaction with a number of consultants. EY was they did the QOE. Myers Fletcher was the lawyers, and we kind of went through this process with KPMG. And at the end of it, after 7 months, the owner decided not to sell anymore. And so I had spent a lot of time understanding the industry, understanding the opportunities in the industry, and so went after another platform, another company within the industry to grow. And that theme has been the same, right? So whether it was our investment in Mailpack, which we saw the opportunity in the e-commerce fulfillment space, whether it's our investment in Airpack, which was a build out of the logistics platform in Jamaica, whether it was our Norbrook Logistics, which was our partnership with FedEx, which was growing at the time because of Amazon. And actually we exited because Amazon became too big of a partner, and we saw the risk there. But it is, we continue to look at areas, health and wellness with Express. We finally bought Hertz, because of the growth in tourism. But we really are focused on industries that we think will continue to have fundamental growth. And then how do we become the number one and number two player in that industry? Because if we can achieve that by building a good business, not only can we grow, but we'll also get the wave of the industry growth. And so that when we look at businesses, we are constantly talking to entrepreneurs. I think we only have bought one company that was for sale. A lot of times what we do is identify an industry and we go talk to the entrepreneurs in that industry and try to convince them that we are the one to pass the baton to. And that has worked, successfully for us. Many times it has not worked. And we spent a lot of time meeting entrepreneurs that we don't end up buying their business, but we learn a ton in that process, right? We learn how they think and some of the mistakes they've made and some of the successes they've had. And we've codified that from a Norbrook, at the Norbrook level in what we call operational excellence. And so no matter what business we go in, we may not know the nuances of that industry, but that's easy to pick up. But the fundamentals of business carry through, all of our businesses. Every time we buy a business or we talk to a person about buying a business, they say to us, this business is very different than any of your others, though this one is really hard. And we give credence to that, but we giggle inside because we've heard that in every industry. But if you carry the fundamentals around operational excellence from revenue side all the way to the cost side, no matter what that business is, you should be able to drive and deliver, sustainable profits and growth in that business. And we believe that the only thing that we think can hurt that is industry fundamentals. And there are industries, if you were in the film business in the 80s, you made a lot of money, right? Kodak or, and then digital came in. And no matter what you do, you could have the best, the old cameras that you click. You could have the best one in the market. It's just not going to sell, right? Because everybody has a cell phone. So we spend a lot of time understanding industry dynamics before we dive into a platform in that industry.
Okay. So I'm curious, how long have you worked on a deal that didn't work out? So, maybe 2-3 years working on a deal, and then for some reason that falls apart. What's the longest you worked on a deal that hasn't worked out?
So maybe if I was as persistent in football as I was in business, I would have been a professional. But I told you I left my job in 2008 to buy Hertz. That deal fell through 7 months after working on it. Well, through persistence, we bought that business 8 years later in 2016. So we effectively would have been working on that owner and coercing him to give us the baton and give us a chance to run that business for 8 years. And it's the best, decision that we've made, and we've made similar as others. That business has done tremendously well. We've weathered the storm through COVID, and now, coming out of COVID, it is probably 3 times as profitable as when we bought it. And you may be hearing some things about that business soon.
Great. Happy to hear that. So in terms of, so Norbrook is essentially, how would you describe Norbrook in a nutshell?
It's funny you ask that, because a lot of people or instinctually describe Norbrook as a private equity firm. And I think that's because we're so acquisitional. It feels like we must be a private equity firm, but the reality is that we're just an investment holding company. So we have no outside equity, and because we have no outside equity, it has allowed us to have significant flexibility in how we approach our business. First of all, we don't look on a exit clock. People say, when you're looking to exit this business, or when you buy it, what's your exit strategy? Sorry. But when Norbrook started in 2008, there was no potential to exit. So I had to build a platform that was built on cash returns. A business that truly grew and had free cash flow to then push up to the parent so the parent could go and buy something else. And that allowed us to build good businesses with good fundamentals, with a long-term horizon, and not worry about what we're going to do with the business today to make it look good because we're going to go public or we're going to sell it or whatever. So we're not a private equity firm, we're an investment holding company. The second is that we're very operational. So private equity firms typically take money from others, invest over a bunch of different businesses, and support those businesses strategically, but really they're betting on the management teams. In our case, we're actively involved in the management and oversight of all of our businesses. All of our businesses stand alone. They have a CEO and a full management team, including anything that you would think of as central services like accounting, HR, and all of that sits within the business. But we very actively work with those managers around everything from operations, cost initiatives, strategy, reporting, and every business is at a different stage. So at some point, some businesses grow up and need less oversight and support, and some are more young and need to be nurtured. But we're very operational. So I would describe ourselves as a operationally focused investment holding company.
Okay. Makes sense. So can you share some of the success stories coming out of Norbrook? So not necessarily companies that you might have exited, though that's okay too. But maybe you acquired this company and you've been able to take it from point A to point B, not necessarily just in revenues and profits, but maybe culture, maybe growth in terms of clients reached, customers served, etc. Share maybe one or two success stories that maybe that resonated for you.
So from a traditional standpoint, I could talk about a number of success stories of businesses that we took and we've grown them into significant businesses and where they are today. But one of the differences in our approach is that we don't just look at businesses, we look at the people as equal or even greater. Because you can have a business, you can have the greatest processes and infrastructure and resources, but if you don't have the right people driving that, especially in the way that we operate, where we are operationally heavy, but we're not inside the businesses, then it's important that you have the right people. And so for me, when I look at the success of Norbrook, it's really our team. It's really the people that work with us and have grown. And those, we have a number of stories around that. So, a lot of private equity firms or investment firms go and they hire what we would call heavy hitters, right? So somebody who is well experienced, has a track record of success in operating business, and they bring them in to drive that business forward. We've taken a different approach where we've looked at and found people who we believe have the intrinsic skill sets to be successful, but don't have the experience and the exposure. And we nurture those managers and into what we consider to be stewards of operational excellence. And so when we look at our businesses, I think that I don't want to hurt anybody's feelings. I'm thinking fast, but I do not believe we have any CEOs that are above the age of 45. I don't, or maybe 50. And I would say that none of them come with the traditional CEO background. And today, I would venture to say that our CEOs operate as good, if not better, than many CEOs that you would know of and see out there in the market. And so for me, that's our greatest success. That has led to a great return, financial return, and great financial success. But it's also personally rewarding to see, where our team is today and the things that they're doing and the the growth that they have enabled for their own teams and for their own people. It's tremendous. So I could give some examples of those. Again, I don't want to put anybody on the spot. So
yeah. I mean, I understand that. So that's okay. I think that based on, I guess, the nature of what you do, if you single anything out, it may, so no problem. So in terms of let's talk about some of the portfolio companies that you have.
Hmm?
There has been talk for some time. I believe this was also published that there would have been an Express Fitness IPO. Can we just be before we talk about IPO, because we're interested in understanding the business first, right? Because if for an IPO to interest you, you need to know whether or not the business is sound or not. So help us to understand Express Fitness business, maybe what you saw in that business, what was interesting for you,
Yep.
and where that company is headed.
Yep. So one of the benefits of being in Jamaica and being in the Caribbean is that you don't have to be superbly innovative, because you get to watch what happens in the first world, and then you can get a sense of where the trends are going.
Yeah.
They always have nuances because the Caribbean is a culturally distinct place, but you can get a sense, right? And one of the trends that we saw for a long time when we wanted to get in was health and wellness. Health and wellness and awareness around health and wellness has been growing tremendously over the past decade.
Yes.
More and more people are more aware of, how to live longer, how to be better, how to be happier, how to be fitter, and a number of sub segments started to grow around this. But there was a point at which this transitioned from just health and wellness to community wellness. And so friends, groups of people were no longer saying, okay, let's go meet up at the bar on a Friday, or let's go, go play some dominoes. But it's, well, I need to get fit anyway. So why don't we go to a spin class together? Why don't we go to a soca size class together? Why don't we go to the nutritionist together? And that trend hadn't really taken fold in Jamaica. So, I'm usually a customer of all our businesses before we buy them. And so I was a customer of Express Fitness, and I saw where a community was building, right? And Ansel and Jackie Clark, who were the founders of that business, they lived in Australia, saw the vision of where this was going, and in Jamaica at the time, all there was high-end gyms. When I say high-end, high net worth individuals could afford it, or what I would call bodybuilders, right? People who are really committed to their bodies
Yeah.
and saying, I'm going to pay $15,000, $20,000, $25,000 to go to the gym because this means a lot to me. And there's this huge segment of the market that was not being tailored to. So they said, all right, why don't we build these spaces that are lower cost, accessible 24/7, and open to everybody. And so they built Express Fitness in that way. Again, I was a customer and I saw the potential. This didn't exist in the Caribbean. There was segments of the market that were being left out even below where Express was serving. There was, community spin-offs that, could be
Yeah.
garnered from that. I mean, just the ability to really step into the community and serve them from a health and wellness perspective was huge. So again, get on the phone, call them, and through a series of about, I don't know, maybe 6 to 9 months, convince them to give us the baton, and we bought the business. We bought the business, and like everything else, we have to go in and we kind of, put in the infrastructure, put in the right processes, put in new technology, and then COVID hits, and our gyms are shut. And as an entrepreneur, you really are tested to the max when you
Yeah.
have Hertz as a business, and the borders are closed. You have Express as a business, and gyms. The government says everybody can go out except to the gym and to church. Um, you have Pure National Ice, which is an ice business that served restaurants and bars that people didn't want to go to. Um, but it also was this unique time to refine our business models and to tighten bolts that weren't tight enough. And so we did that, and we believed in the health and wellness sector and bet on the business that's so big that we built our biggest gym during COVID, which is our flagship gym up at Kansas Spring Golf Club. And we did that, with the expectation that COVID was going to last 3 months. I'm just kidding, but we expected, that one day COVID would be over and we would be back in the foray of people, focusing on health and wellness. But the truth is that even more so because of COVID, people realize that being healthy is an important piece, not even during a pandemic, but in spite of a pandemic. And coming out of that, we've seen the business blossom tremendously. We have more members today than we had pre-COVID. We have a pipeline of 5 more gyms that we want to be building. But more importantly, we are taking this business out of the boundaries and borders of Jamaica. We believe
That would have been my next question. Are there plans to expand across the Caribbean?
For sure. What we do here in Jamaica is unique, but it's also unique in the Caribbean. There's no gym chain in the Caribbean. And I say gym chain because that's what we do today, but I should say there's no health and wellness provider because there's so much more to do than just provide gyms. So the boundaries for us are, to me, limitless in the health and wellness space, and we're super excited about that. And I think you'll hear some interesting things coming out about Express Fitness. We have a great team, a really, really awesome team, and what's more important is we have an awesome community. I don't know if you've been to any of our gyms, but for using colloquial terms, there's a vibes. There's a vibes there. They had a DJ there day before yesterday at Kansas Spring Golf Club at 5 to 8, and he was playing, and everybody's lifting and doing their stuff and just pushing to make themselves better, healthier and continue along their health journey with us.
I see so much opportunities for that space as well. I think what is being provided now is really a baseline for other things that can be done. So it sounds to me though like that those expansion plans would make a good use of proceeds for maybe an IPO. So this is where the IPO question comes in. Are there any plans for 2023 for an IPO for Express Fitness?
Are there plans for 2023? I think that ultimately Express would consider a listing. We did before. Sagicor is a 10% owner in Express, and we continue to have dialogue around where the market is and what's the right timing and so on. We don't particularly need the proceeds of an IPO to grow the business, but I do think that seeing what has happened with Mailpack, with the profile of the company going public, I do think it enables a broader reach into the community, right? So for some reason, when a company goes public, not for some reason, but it obviously gets this free marketing and awareness that pushes people to say, you know what, I never heard about this business. Let me see what it's about. And our goal is always going to be to do right by our customers, and everything else will flow, whether it is financial returns, value in an IPO, whatever. But we don't really focus on that side of stuff. What we focus on is what are we chartered to do, and how are we going to do it better than anybody else? And then if we do that, the rest will come. And so there is some value in an IPO and being listed because it gives us access to more Jamaicans, and we want more Jamaicans to be healthy. There is so many parts of the segments of the economy and the market that aren't being touched today, aren't aware today, don't think that health and wellness is for them. And we're super excited about being able to do that. And I think our IPO would help that. So I can't be sure, but
I think it also gives an opportunity for your members to, because what we see is, Jamaicans have a sense of pride of owning a piece of the companies that they do business with. Because, for example, in our Telegram group, we had a season where persons would share the products and services that they consume from companies that are listed. So, for example, if it's Sunday, we're seeing certain products being displayed. If somebody is taking a road trip, we're seeing a certain company being displayed. And I see that more and more persons are interested in that, because there's this mindset that instead of just buying the thing, own it. And if it's listed, then persons have an opportunity to own a piece of a company that maybe they've been a member of for years. So I think that's a great opportunity as well.
I think it's a microcosm of the Norbrook story, right? So I think 70% of the businesses we've bought, I've been customers of. And so there's something about saying, okay, when I'm paying my membership at Express, I'm kind of paying it to myself, right? I'm
There you go.
supporting myself. And so let me get my friends in here. Let me get my family in here. So for sure, we see that effect, and we're excited about leveraging that effect when it does go public. So again, I can't say it's 2023, but I will say that it is in the pipeline and will happen, at the right time.
I'm going to ask you for two pieces of data on Express. If you can't tell me, it's okay. But we would be interested. Well, I'm certainly interested in understanding how many gyms do you have currently, and how many
Well,
members do you have currently?
so we have 10 gyms today, and then we have 2 outdoor facilities. Membership is a little bit too competitively sensitive
Okay.
release today. What I will say is that while we are excited about our membership because it is higher than it was pre-COVID, it's literally a small, thin slice of the population of Jamaica, which
Okay.
says to me that the opportunity is limitless. We have a business of the scale that would be one of the larger businesses, larger junior market businesses, but yet still, I think when Sagicor does their Sigma run, they have substantially more people than we have members. So and all those people are out there running that day. I think you know how many people go to Sagicor Sigma? It's like,
I didn't get the latest numbers, but yeah, I've seen
I don't know why I think 30,000
thousands,
or
yeah.
something like that. I could be wrong. I don't know why the number 30,000 comes to my head. But my point is that growth for us it should be extremely easy given where we are because of how
Yeah.
many people we don't serve.
Okay. All right. Thank you for that. So in terms of so outside of Express, are there any other portfolio companies that are on the path, not necessarily within the next 12 months, but are on the path to an IPO or listing of some sort?
Yeah. So so we have a couple different businesses. We have Norbrook Equity Partners, and Norbrook Equity Partners is made up of Mailpack, Hertz, Express, Pure National Ice, SMB, which is Starlight and Blueprint, the merger of Starlight and Blueprint. I'm forgetting, and I should not be doing this because
I
somebody.
can go to the website and share. Yeah, I have it up in another tab
Yes.
here.
I said Mailpack, Hertz, Express, SMB, Ice, and Alaska, which is our joint venture with Jamaica producers in DR. And I would say that all of our businesses, because of how we operate our businesses, right, with a parent company and proper corporate governance and reporting and growth initiatives and a CEO and so on, all of them are positioned to list. And if you think about the tax benefit of listing, 2, the exposure benefit of listing, 3, the value realization of listing, it
Yes.
wouldn't be far-fetched to say that all of our subsidiary businesses in the next 18 months would be listed companies.
Okay, interesting. Thank you for that. So let's add a few of our viewers would have known you through Mailpack. So I wanted to ask some questions related to Mailpack since we're about we're more than halfway through the interview. So in terms of Mailpack, what are the clear segments of Mailpack? Because some persons may have maybe a pigeonhole view of Mailpack. So can you give us the overview of Mailpack in terms of all the touch points and aspects of the
So
company?
our core business at Mailpack is our e-commerce fulfillment, right? That's where we give people a Miami address. They shop online, they send it to their address, and we take it from there. We consolidate the shipment, clear it through TSA, bring it to Jamaica, clear it, and deliver it to you through 12 locations or delivery. And that has always been the base of our business, has allowed us to touch a wide cross segment of Jamaica. And we continue to expand on that. We are expecting to launch a um, another brand under that umbrella that will allow us to serve customers in very different ways. As you know, similar to what I said about Express, we want to make sure that no matter where you are in the economic ladder, or the socio-economic ladder, that we are allowing you the benefits of online shopping, which is the savings, the convenience, and the choices that you get from online shopping. So that's our core business. We also have Mailpack Local, which is now being run through a third-party virtual mart. And that's our technology that allows you to shop online locally. So again, the first one was shopping online internationally. This allows you to shop online locally, and whether it is Price Mart or groceries or stationery, you can go on our website, buy, and have those items delivered to you same day or next day. So that's our Mailpack Local platform. We have a third platform that was recently launched called PYB, or Pack Your Barrel. We're
Yes.
super excited about that. Everybody knows what barrel culture means to Jamaica. In fact, I saw a Levi's ad where a little boat was coming in and brought in all the Levi's in a barrel. This was at the Super Bowl. They paid $6.1 million to advertise Jamaican barrel. But the reality is that the barrel process is a very manual, tedious one. So if you're in New York, you have to go to Walmart or go to Target, buy stuff, carry the barrel up to the apartment, pack the barrel, carry it back down, get somebody to pick it up. And what we've allowed you to do is do that all digitally now. So you go online, you buy a barrel, and then you shop online. You get a barrel address that's dedicated to you. You shop online, and all of the stuff gets packed in the barrel. You have 2 weeks to do that, and then we pack that barrel and ship it off to you. So you're getting all the benefits of online shopping, but you're getting all of the savings, the freight savings, as well as duty savings, to be very frank, because it's a 6,000 Jamaican flat fee for everything in the barrel, and so you're getting the benefit of that digitally. And then we yeah, those are our three platforms. So Mailpack
Okay.
Services, Mailpack Local, and PYB. And as I
Okay.
said, a new brand under the Mailpack uh, International e-commerce platform.
Yeah. So Mailpack would have had an interesting journey, right? So listing, and then I think the pandemic would have given persons maybe an unrealistic expectation as to the growth of Mailpack. And so we're a few years removed from the initial impact of the pandemic.
Yep.
So in terms of how should someone look at Mailpack and its industry and its growth prospects moving forward, especially in light of the segments that you just mentioned.
Yeah. So it's interesting because we had this portfolio of businesses that were extremely affected by the pandemic. Hertz shut down, Express shut down, PNL basically not selling anything. And then you had this other business, Mailpack, that because everything was shut down and people couldn't move, they had to shop online. So we had new people coming into the market. We had old people buying more. And so you saw the numbers shift significantly to the right. Then the world reopens. And like we're seeing now, we're benefiting from, for example, at SMB, our entertainment business. People are like, we are outside, like we are, taking advantage of this. We're not sitting down in front of a computer.
Yes,
Um,
nobody's interested in being inside anymore.
correct. And so what happens? The pendulum shifts the complete other way, right? Because now people are going to Miami and shopping, or they're going, doing other things other than sitting in front of a computer and seeing things that they want to buy. I think now the dust has kind of settled and the pendulum is back in the middle, and you saw that through our numbers, right? So in 2022 Q1, I think we were down like 41%, and then it was 17% down, and then it was 14% down, and so we're seeing that big gap, kind of settle. So when someone asks me how to think about Mailpack, where is Mailpack on its growth cycle, I would say we are back to where we were pre-pandemic, right? So we had this amazing growth path because e-commerce was just continuing to grow and evolve in Jamaica. And then we had this uplift and this downlift, and we settled back where we are. But if I go back to what I said to you about Norbrook, right? And I said, what do we invest in? And industry is a big piece of that. The question I have to ask myself as the majority owner of Mealpack is, where is this industry going? And the industry for e-commerce, in my mind, is still nascent in Jamaica. When you look at where the US is, where 96% of households shop online, I would venture to say that that number is probably 35% in Jamaica. So we have this huge capacity of online shopping growth to happen in Jamaica. And if that's the case, and we continue to be the number one provider, which we are today, we've been for 25 years, and we continue to be, then if we can innovate in the right ways, innovate our technology, innovate our service, innovate our reach, and innovate our pricing, which is important because pricing is a key factor as the market gets more crowded. If we can innovate around that and solve the e-commerce fulfillment needs of the economy, then we should be able to ride that wave of e-commerce growth. So we are fully committed to the industry. We're fully committed to the business. We see that we rode the wave, we swung back, and now we're ready again. But we're ready in a different way because the swing up forced us to increase our capacity and become more efficient. The swing down forced us to become more cost efficient. And so now we have this business that has this huge pipeline for growth. So we have a fixed cost infrastructure, our warehouse and our processing capabilities and our technology, which we invested in during the growth period. That's still there. But then we've tightened the business and the operations of the business to be more efficient on how we process and how we deliver. Then you just say e-commerce continue to grow. Those two should end up just creating a nice pipeline of financial growth for us and for the business.
So pretty much you've built all this capacity and now you can grow without the type of problems you would have had if this growth came, without that increase in growth in such a short time. So you can now grow in a more, I guess, comfortable way, for lack of a better term, because you've already put what you needed to in place to enable that growth.
Absolutely, right? Absolutely. And then, Mealpack wouldn't be a Norbrook business if acquisition wasn't a part of growth, right?
That was going to be my next question, because when I think about the industry, Khary, I honestly thought that we did a review of Mealpack. Mm-hmm. And one of the things I said in that stock review, I was like, I wouldn't be surprised if Mealpack did an acquisition, because there are so many players in the market now, not even necessarily the bigger ones, but smaller ones that it would make sense to kind of take up some of those and further increase your market share in the space. Because even though you're a leader, there's still, I think, probably over 100 persons in the space now. So mm-hmm. there's great opportunity there. So what are your thoughts on that?
It's interesting, and I don't want to go into too much of the strategy around this, right? But what I would say is that customers in this space are transient, because there's no, when I got into the business, you had a membership fee, so you pay for the access, and so you're not leaving because you paid your money. Yeah. Now I can get an address with 50 companies if I want, and I can say, this is the one I send this stuff to, and this is the one I send that stuff to, or whatever. So when you acquire a platform, you don't necessarily acquire the customers, which is tricky, because they could leave it tomorrow. So when I said acquisitions, there are some strategic acquisitions that we could make locally, and I'm thinking about just what I say to make sure I'm not sharing too much. But there are segments of the market. That's a reality. And if you think about, just go on Twitter and spend a little time and understand why people use what companies and where those companies are positioned and whatever, there definitely is segmentation happening, When I started, there was no segmentation. It was us, DHL, a company called Global Couriers,
Yes.
and like three others. We acquired Global Couriers, we acquired DHL, and we're still alone because everybody was in one segment. And that was the upper echelon of the socioeconomic ladder. Those are the people that understood online shopping, had credit cards, and whatever. Now that market has grown fivefold.
Yeah.
And so there is the low socioeconomic, there's a middle socioeconomic, and there's a and so you have to figure out where you're going to play. So if we are going to do an acquisition, it's not just to do a roll up, because you could buy everybody and end up 100 new ones just pop up. But it would be to be strategic around either geography or customer segment. And that's all I'll say on that
Yeah.
local.
I think customer segment would be interesting because you could, based on where you are and where you stand with those companies that are currently within the portfolio, you could maybe even go one step lower, because then it wouldn't be that much of a stretch from where you're currently serving, and then you have the opportunities because of the capacities that you've built out to serve them fairly easily because of what they would be expecting based on all the things that would come with providing that service.
I plead the fifth.
Okay, cool. So,
But what I will say is that, all of our businesses also coming out of the pandemic, we've been pretty aggressive around our geographic expansion. So
yeah,
going into the DR was a big proving ground for Norbrook that not only can we operate businesses outside of cultures that we understand, because before we were in the US where I lived, we were in Jamaica where I grew up and I still live part-time. And we did a business in Ghana with a partner who lived there. So we were always fearful of, okay, we operate in areas that we know, but what happens if we go into somewhere where we don't know? In the DR, not only do we not know the market, we don't even speak the language. But this idea around operational excellence has parlayed so well over there that it gave us the confidence to say that our methodology, our refined 15-year methodology about how we invest and how we grow businesses is now at a point where we feel we can take it out, outside of areas that our comfort zone is. And so you will see all of our businesses, including Mailpack, look for some are further along in the journey than others, but look for opportunities that take us off the shores of Jamaica and into markets that are meaningful, that are different, that provide diversification, that provide somewhat of a moat because of some of the nuances between being a regional player versus being a local player. So that's something that you could look out for as well on the Mailpack side.
yeah, great. So, two final questions, Mailpack. We do have some comments here as well from our audience that I'll bring on the screen in a second. But one, when can we expect to hear dividend consideration from Mailpack? Is this going to be maybe your biggest, dividend payout? So that's the first question.
I'm really surprised at that question. Last year we paid out $420 million. The year before that, I think we paid out 350 or something like that. We paid close to $1 billion in dividend since being public. So
Yes.
that question makes it seem like we've been hoarding the dividends and not paying it out. I don't know any other company on the junior market that is paying out $1 billion in dividends. So
yeah, but I think you understand why the question is, I think, for the person who posed it, and I'm going to assume their intent, and that's because persons haven't really been seeing capital gains on the market overall, so maybe they're trying to compensate in terms of dividends. So I think that's where they may be going.
So I asked somebody to show me what the dividend yield is on the market, all the market companies, and Mailpack has a 9.5% dividend yield. Well, at the time, it's probably like 11.5% today, which makes us the highest dividend yielding company. And so for me, when I say I see a company that is in a growth industry, it leads that industry, and it's paying 11.5% dividend, but its stock price is where it is.
Yeah.
I must say this is probably because I'm too conservative of a chairman, and I need to be out there, telling the story more, because the numbers don't make sense to me.
Yeah.
But we are, the benefit that our shareholders get is that we sit alongside them, right? We own 74% of Mailpack. And so what's good for our shareholders is definitely good for us. And so that's one of the benefits that, our shareholders can, bet on and count on, is that we are not here as Norbrook to say, okay, well, we're collecting a fee or whatever to run this business. We are going to do everything we can to make sure this business grows and spits off the right cash. Whether or not the market wants to give us credit for that is the market's decision. But as a shareholder of Mailpack, I can assure you that the business will continue to grow and continue to be a good cash earner for our shareholders.
Okay. So how soon would they be able to see? Well, I know. So let me ask it this way, because I think the person is interested in maybe when to expect a dividend. I don't know. I mean, I would tell them
I
to
would
look.
say this, 'cause obviously, we can't answer that question, right? So I would say this: just look at the history of our dividend. I think we pay 2 to 3 times a year. So just look
Yes.
back at the history, and let's say this is a great
You're likely to be consistent with that history, is what you're
for
saying.
sure, for sure, for
Okay.
sure, for sure.
Fair enough.
We
All
are
right.
a shareholder as well, so we ask as well, when is dividend coming?
Okay. All right. And I think the other question that we have remaining for Mailpack in terms of what our community asked was, based on what you have earmarked in terms of growth for Mailpack, are there any plans to seek additional funding to finance that growth? But then I guess it comes down to the conversation dividends, right? You're paying such a healthy dividend. You could probably pull back on that a little and finance the growth yourself. But I'll still ask the question because it was submitted.
So Mailpack has no debt on its balance sheet, and so we have capacity to grow through our cash generation or through debt, and so I think it's going to be dependent on the situation.
Yeah.
If we see a really meaningful opportunity that we want to go after, it may require a bit of mix of equity and debt. And obviously, our business will not have any issue getting debt, because we have a ton of capacity to take on debt. But we also believe in putting our own money to work, getting good returns on it, and we believe in Mailpack. And if we're going to do something big, we would be investing in it as well. So. Nothing to come to market for today per se. And the one other thing I would say is that keep in mind that we are a junior market company, and so our capitalization has to remain within a certain below 500 million. But we're very opportunistic. So if things come, we'll look on it, and when it's time to pull the trigger, we'll figure out the best way to finance it.
Okay, great. So in closing, well, before I ask the closing questions, we do have a few comments here that I want to get to. I'm taking them in reverse order, guys. So please don't feel bad if you ask your question first and you don't see it here. Sean is saying, does that mean Mailpack is still considering to pay out dividends? I think we just got the answer to that question. Sean also said that Mailpack dividend is sweet, but it's very risky. I'd like to understand what you mean by that, Sean. What would you consider risky there? Carl is saying Mailpack just focus on becoming a full service fulfillment center that provides logistics for e-commerce brands to access North American markets. That doesn't seem like a question, more like a statement. Sean is asking, what other ways is Mailpack looking to diversify its income stream because the shipping business is getting very saturated?
Fair point, Sean.
Well, he's asking what other ways are you looking to diversify your income stream?
And I said fair point for a reason, because if I told Sean what other ways we were looking, then I might be seeing Sean in the market.
Yeah,
But I do say fair because I think he's spot on, right? I think that it's important. If you look at the Norbrook model, there's a reason why we have 11 businesses. We believe in diversification, and you cannot put your eggs in one basket, and that's just the reality that Mailpack is in. That we believe in e-commerce fulfillment, but e-commerce solutions globally is uncharted waters. We have so many things that we can do as Mailpack. We have a steady generation of cash. We have the ability to go and buy stuff. We have the ability and the team to run stuff. So I won't say specifically where we're looking, but I will say that it is astute of Sean to identify that we should be looking.
okay. All right. Sean has a free idea for you. He said Mailpack could ship things to consumers living in the US or any other country. For example, merchants in Jamaica could use Mailpack as a means to get their products out to people living abroad.
Yeah, I know a couple of businesses that are pursuing that today, and I think it is in the e-commerce business is a long tail, right? So um, you have to get a certain volume to really justify a business, and
Yeah.
culture takes a long time to change. And so while this concept makes a ton of sense, and I think will have a great utility over time, I think today it's still in its nascent phase. But if you look at the Amazon model, one of the good things of being bigger, more prepared, and more capitalized is that you can watch who is growing, where they're growing, whatever, and then either acquire them or step in and build a similar platform very
And
quickly,
scale much faster. Yeah.
and leverage your existing customer base and distribution to do that. So it's not lost on us. I need to figure out who Sean is, but it's not lost on us,
Sean,
Sean.
Sean sounds like he's in the industry
For
for
sure,
some
for
reason.
sure, for
Yeah.
sure. For Sean will buy a helicopter though.
Sean is
Uh,
saying, what advertising strategies is Mailpack leveraging to get its name out there?
Everything that you can think of. So I mean, we are a digital business, so we use digital marketing quite a bit. All of the mediums. We do some of that in-house. We outsource it, and then we do traditional promotions. We have partnerships with key providers, banks, credit card companies. So we continue to do the things that we need to do to get our name out there. But you can never do enough. So Sean, if you have more ideas, more of these free ideas, please ask Jermaine to send them over to us.
Yeah. Sean definitely seems like he has a company to sell you, maybe. Um, Carl is asking, what are the possibilities of building Caribbean e-commerce brands that can rival top players, starting with building the ecosystem? I'm not sure I understand that question. What are the possibilities of building
I think
Caribbean?
what Carl could be asking is, what's the chance of building the Jamaican Amazon or the Caribbean Amazon?
Ah, yeah,
I will tell you that many have tried and many have failed, and simply because of what I described earlier about the scale, right? So what Amazon has when they're serving, 5 billion people globally is scale, and scale gives efficiency. Scale gives price savings. When they go to a provider and say, "Listen, I need to take
yeah,
30% of your margin," and this guy says, "Well, if I put my product on Amazon, I'm selling to the world." Just Amazon gets the 30% margin. So Amazon lost $24 billion to get in the position to be able to say what I just said.
yeah,
There'll never be a business in the Caribbean that can afford to lose $24 billion to establish itself. And so, our strategy has been, how do we partner with, or how do we run on the rails of these bigger guys? But to compete head to head with the eBays and the Amazons of the world out of Jamaica or out of the Caribbean, I think it's just not a battle that we are poised to
yeah,
fight.
yeah. It makes more sense to partner or leverage than try to create it, especially based on when you sum up the total number of potential customers, even in the Caribbean, and who you'd be serving. It really
Yeah.
would make sense. All right, and the final question that I'm seeing here, Paper Plate is asking, what are the guiding principles that Norbrook uses when buying these companies?
Yeah, I would ask Paper Plate to watch the beginning of the show, right? Because we went over this. But really quickly, we buy what we consider to be well-positioned businesses in growth industries. So really, we evaluate the industry, make sure the industry has the fundamentals for growth, and we find a platform in that industry that we think we can fix to become a number one or number two player. We go into that business. Well, we acquire the business, and we go into that business, and we put in a number of processes, people, resources that allows us to reach what we consider operational excellence. And then once we have that, then we can scale. And scale means organic, increasing revenues, decreasing costs, or through acquisitions. But we we are industry agnostic. We used to say that we do everything except retail and real estate. I would say 2023, our biggest investments are going to be in real estate. So right now, retail is the only place that we haven't touched. But we generally are industry agnostic because we feel that any growing industry has businesses in there that we can take, grow. If you buy at the right price and you fix the business in the right way and you run the business for growth, you can create great value from anything.
Yeah, I'd say you haven't touched on education yet either, so just putting that out there.
Have we touched on education?
Have you touched on education?
You're right. We see education as more of our philanthropic element to our business.
Interesting. Okay.
We're very involved in a number of schools, and we believe that education, to be honest with you, is the key to the future of our country. I think that's the area that we need to invest in as Jamaicans to fix a lot of the issues we have. So people focus on crime, for example, but education helps to fix crime. People focus on capacity for foreign investment, but education fixes that. People talk about brain drain, but education fixes that. So we do believe that education is a core fundamental area of our country that needs support. But you're right, we've never invested in the education space.
Yeah, and the reason why I'm throwing that out there is L.E.A.R.N Grow invests in the education space. So
I didn't miss that. This is my job to pick up on these subtle.
It definitely wasn't subtle. So I see some questions kind of sneaking under the curtain here. So what I'll do, guys, if it's okay, I'll ask this final question because we have 3 questions that we normally ask in closing that I really think would be of value to the audience. So Sean, if you don't mind, I'm going to pause your question for a sec, see where we are after I ask these 3 questions, and then we'll see if we can maybe get in one more. But we do we did want to keep the interview within an hour, but it just means that we're getting great value from the conversation. So Khary, in closing, I wanted to ask you 3 things really, and this kind of helps us again to understand the mindset of the CEOs that we interview. So what's your personal investment strategy? So if you weren't a part of Norbrook, how would you be investing? Like, what's your style as an investor?
Yeah. Sometimes I'm on these like WhatsApp groups or whatever, and people say, Khary, you're a finance guy, you're an investment guy, so what's your thoughts on this? And this is going to be embarrassing because I probably am the worst personal investor. I have one business that I invest in, and it is Norbrook, and we have some personal real estate, and then a couple other things. But the truth is that the majority of our assets sit inside of the businesses, and the reason for that is what I told you. We have no outside equity in Norbrook, right? So I would have started the business in 2008, and everything that the business made had to be reinvested, and that built this culture of continual reinvestment. The Warren Buffett model of delayed gratification. And so I see opportunities. We've spent some time in the VC space, for example, and that didn't go as well. I used to own equities, and I don't have the emotional capacity for equities. I'm way too
I
competitive.
definitely understand that one. Definitely
Uh,
understand.
so but what I would say is that I do believe so. So I actually just finished again the Intelligent Investor, right? And I read that book, I don't know, once a year to keep true to this mindset of long-term investments and diversification around that. And so whether it would, let's say I did invest in equities, or I did invest in bonds, or I did invest in real estate, I think my mindset wouldn't change, which is that I don't buy into hype, I buy into fundamentals, and whether it is a business or the equity or whatever, the value of that needs to generate either today or in the future what I expect to be cash flows that are commiserate to the price I'm paying for that asset today. And with that, if I do that, and then I do that through a diversified portfolio, in my case, it's a diversified base of businesses, but we do have 11 businesses that are diversified, and that helped us get through COVID, because when one went up, when five went down, one went up, right? Um, but if we invest in the fundamentals and through a diversified base over a long tenure, so not always trying to take these short home runs and swinging for the fence because I want to catch up with everybody, I want to make $1 billion today or whatever. I do believe that in the long run, that investor, including myself and what we do at Norbrook, will be better off than taking some of the riskier paths, or the more short-term paths that are out there. So
Great.
that's my.
Great. Thank you for that. So you mentioned the Intelligent Investor. What other books are you reading right now?
So I will also say that I'm not the biggest reader, right? I need to find more time to do that. I listen to audiobooks when I
That's
go
well,
on.
they say that that's the same. Some persons think that's the same as reading, right? I just think when you
It definitely
listen,
is not, by the way.
your attention may not be fully there, so you may miss some things, but that's fine too. So what
I'm reading
audiobooks are you listening to right now?
Shoe Dog. It's a book about Phil Knight.
Okay.
It's interesting. I'm a big fan of learning about other entrepreneurs and how they think, how they approach business, some of the mistakes they made. I'm also, so I also read, true life stories of this. So, well, I won't tell you some of those titles, but I like interesting stories, interesting lives, interesting people. Sometimes people take a good path, and I can learn from that in my business. Sometimes people take a bad path, and you learn what not to do. But Shoe Dog is the one I'm reading now.
Okay. And final question here: what's the most underestimated part of getting funding for your company? So we have a lot of entrepreneurs in our community, and a few of them have been trying to for example, get funding for their company, grow a company, do partnerships, etc. What's the most underestimated part of that process from the entrepreneur's perspective?
I think the whole thing is very difficult, and hence why we so our funding has only ever been debt funding, and that's because the process of getting funding was extremely tenuous, tedious, challenging, but it's doable. And it's doable when you have certain things in place. So the first thing is that, and I learned this over time, right? So when we went to get funding for Hertz, which was my first deal, everybody's like, what do you know about the business? What have you ever run? What's your business plan? How you gonna make money?
Mhm.
So we were prepared. Um, Over time, we've learned that if you have a investment thesis that you are willing to put your own money in, because the fundamentals, I go back to this whole investment, right? The fundamentals of the investment make sense. You can explain how you've managed risk around this investment. So what if things don't go the way your projections say? You understand what you're going to fix in the business to make it better, what your growth, you have a clear path for growth. Here are the things I'm going to do to make this business better. And then you have some level of either track record or capacity or access to track record to say, here is the team and the people and whatever that's going to allow me to do this. Then I think that capital will follow. What I will also say is that, in 2008, capital didn't exist. Capital for equities and investment didn't exist. Today, what I'm seeing, and I get calls all the time, hey, you're taking investment in Norbrook, you're taking investment in Norbrook. There are people out there who have pools of cash that say, I'm done with treasuries. I'm done with, what's it called in Jamaica? Repos. I want to know, take stakes in business. I want to invest in people. I want to invest in business models. And so it's a different dynamic that's out there, including ourselves. We invest in businesses, typically ones that we control. But we've had a couple partnerships, and we've had a couple where we invest in other people. But the most underestimated part of it, I would say, is the nuances that come with outside investors. Okay. And again, even though we never had any equity investors, even the debt investors, the bank who gives money to 1 million people, there is a new level of pressure. There's a new level of corporate governance. There's a new level of reporting. There's a new level of even just personal, fulfillment that you need to meet, because now you're beholden to somebody else. Your success or failure can affect somebody else, and that can affect your mindset. You stay up and don't sleep on your business. Sorry, you stay up and worry about your business in one way when it's your money and your family on the line. But when it's others and people are depending on you and your reputation is dependent on it and so on, it's a different type of stress. So I think that's the biggest piece that would come with it.
I mean, thank you so much, Khary. I think we got more than we were expecting in terms of just some of the questions and the level of detail that you gave in terms of your answers. I think this is a great video to watch if somebody is thinking about being an investor and just learning the mindset of what it takes to invest successfully for the years that you've been doing it. So I want to thank you so much for agreeing to be here, sharing the value that you have. We wish all the best for Norbrook and its companies. We expect to see and hear great things. And so, thank you so much.
Thank you, Jermaine. I appreciate it. And, sometimes I said, again, having these discussions even allow me to think through some things that I don't get a chance to think through, and take a break and say, okay, who are we and where are we going and whatever. But I do appreciate this and I appreciate the time. So thank you.
Yeah, I use these as an opportunity to help me to consult with successful CEOs. So I get to ask. Sometimes I'll squeeze in my questions, in the midst of all the community questions, just for if there's something I really want to know. So it's been fun for me doing this. I've learned a lot from this conversation, and there's some things that you said that I'll definitely be watching the replay and taking note of, because I think as I try to figure out how to grow L.E.A.R.N, Grow, Invest, the company, there are things that would help me along the way. So thank you so much.
Yeah, no, thank you.
All right. Bye-bye.
Yeah, man.
All right, everyone. Thank you so much for being here. I know this is a little bit early, so thanks to those who tuned in. Thanks for all the questions. I think that what we're hoping to do here, and I thank Khary so much for this, is give persons an understanding of Norbrook mostly, and that's why we saved the mail pack questions till later on. I hope that you got some value from it. If you did, please remember to like the video Let us know which CEOs you'd like us to interview next. We do have another early episode coming tomorrow. Renee will be interviewing two interesting ladies from Visual Eats, so be sure to check that out. And we do have a lot of content coming your way, so be sure to subscribe if it's your first time here. Thank you so much for watching. I hope to see you in the very next video.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-Based Financial Coaching Program.
Find out more about us at learngrowinvestclub.com.